economy stocks? Wait a minute, we're in the middle of this rotation now, out of tech stock into economy stock. I'm talking about financials, materials, and utility. Now remember, financial stocks, real important that you have low rates. It's real important you have rate cuts. And they gave that message out to us last Tuesday, July 16. Today's July 22. And on that day, everybody went nuts. They dumped their big tech stocks and they went into the economy stock. Market shot up. But wait a minute, things in perspective. Why would you go from Apple and Microsoft and Nvidia or the tech stocks to lazy boy chair? Or Ethan Allen Furniture, Coca-Cola. What are you, nuts? So if you think about what's going on, this rotation, it all started with first the 700-point rally based on the promise. Remember, they've been promising rate cuts since October 2022. But why on earth would anybody say, I'm just going to dump tech and get into a big old lazy boy recliner? What are you, nuts? It makes no sense. Because if you put it into perspective and take a look at what's been going on, yeah, it's pretty impressive. When in 2023, the S&P's up 24%, the Magnificent Seven, 6 stocks are up 108%. If you pulled out the 7 stocks, you wouldn't be up 24%, the S&P, be up 6%. Now, you take this year here, it's the same thing. Moving this stock market up in 2024 is the tech stock. Now, we're up 31%. I'm talking about Magnificent Seven stocks, 31%. 49% of the 31% comes from 3 stocks, Nvidia, Google, and Microsoft. Here's what I think is going to happen. I think there's going to be another rotation. We started to see some of that today. They're going to go back into tech stocks. Why wouldn't they? That's where the money goes. And you have a whole new set of investors that have been in these tech stocks for 10, 15 years. They don't know anything else. Here's what we're doing. Last week, we rotated to the banks. Let me show you. Now, I'm going to put this on my Pro 2 color-coded chart. This is our technology. And it's called KRE. Those are small mid-cap banks. Look how nice that is. Look at that beautiful green. Now, remember, the color-coded chart we designed, 20 years ago. Been tested over 20 years. Here's the beautiful thing about it. It gives you great confidence because when you click on it, you just go down here and you have a feature, click on that, and it'll turn yellow. Okay, it'll turn yellow, telling you, hey, money's slowing up. But it didn't. Wow, that's good. Well, let's go look at another one. How about Microsoft? Oh, here you go. See how that turned yellow? It's telling you that money is coming out. Microsoft, you're in here buying, you're doing nicely, you got great confidence. Then it turns yellow. It says slow up, right? Then it's telling you it's going to turn red. So you're already ready for red. Like here, move. See that? So the green gives you great confidence to buy. The yellow you can still buy if you want. Okay, but it tells you to slow down. Okay, there could be a bump in the corner, and then how it turns red. What confidence this gives you. I mean, it really is. It's really great. So we switched to our KRE. We did beautiful on KRE. We also switched to Walmart. We did nicely out of Walmart. Showed up a little yellow here. Okay, but that's okay. It doesn't stop us from buying. We just slow it down. Matter of fact, you can even take it off if you want. So we went to Walmart as well. And we also went to RCL. Look at this. Our cruise lines, really beautiful. So again, remember, the yellow is a wonderful thing because all it does is gives you a little nudge. Say, look, we're doing great. Stocks going up, terrific. But some of the money is starting. The investors are taking some of the money out. Okay, as long as you're aware of that. You can't possibly be aware of that with a regular generic chart you've been using for years. So here's what I believe is going to happen. We're going to rotate back into the tech stock. Our gold stock went up. Beautiful. We're up big time in our gold stock. They pulled back a little bit, but they're going to rally again. Why? Because they're destroying the dollar. They keep spending more money than they take in. I'm talking about the government. They keep running deficits. And when you run deficits, we don't have any money to pay them. You have to print. And when you print money, that's the inflation. But they lie and they say to you, oh, no, inflation, greedy companies, greedy big companies. They only put half the potato chips in your chip bag. They're greedy. It's their fault. No, it's not. When the money keeps going out, and there's not enough tax revenue come in, that's a deficit. Have to have money. And what do? You increase the money supply. Look right here. They're a bunch of liars. Look here. Money supply is going up. Look at lately right here. The more money supply, you should follow that money supply because that's the one that tells you if you're going to have inflation. So again, I believe we're going to go to the tech stocks. We're going to have one more big rally. I think this 3 to 4% pullback sets up for one big tech rally. And then during the election or right after the election, I think that's when we have big crash. The color-coded chart, as I showed you, tell you that. The color-coded chart, that technology will tell you that. Gives you such comfort. Just check it out for 10 days. Well, that's about it. So let's see what happens with this rotation. As I said, I don't really believe that investors are going to stay with their lazy boy chair and their Coca-Cola and not buy Nvidia again or Apple. I just don't see that. But let the charts tell you. Let the money flow tell you. That's what we do here at Phil's Gang. I've been helping people just like you for 25 years. I want to help you, okay? The non-professional. Check out our color-coded chart. You'll love it. See you on the charts. Click the link in my bio below or go to philsgang.com.